Good morning to all traders and welcome to another Markets Waves, August 25th today. Certain moves continue with their trend direction, and some others seem to be becoming a bit more volatile, like the equities, for example. It's a nice session to go into some assets and particular assets and see how they perform. We're gonna take a different route today. I don't think there's need to do the DXY, even the euro, but I will do the euro dollar. I will do the Aussie oil, USDCAD, and the S&P. Starting, of course, with the euro dollar, we're seeing that the case here for more upside is getting stronger and stronger. Okay, we have bounced off the low with a nice 5-wave move to the downside anyway at 116.61, and it looks like to me that we are moving up and we are currently correcting. Perhaps we might get another leg down. I mean, the retest of the 117 is going to be amazing should it hold, and then we continue higher up for wave C or B of this particular leg to the upside that we are expecting. Now, do also pay attention to there's not a divergence here, but you can see that the rate of upside here, momentum versus to the price, it's a bit faster, okay? And you'll be able to notice also that we'll have a short bearish divergence over here, very small one, both internally and externally to the MACD. And on the RSI, it's a similar case, very tiny signal. So I'm expecting this to continue a little bit lower down. Perhaps we might get a double bottom over here at 117.26, but should that break to the downside, we're heading for 117 retest. Okay, and from there, of course, continue higher. Now, if that's not the case, well, you will know that's 1 and 2, 3, 4. We are good there. Then this could turn out to be some sort of diagonal here, 1, 2, 3, 4, and 5 perhaps. Although it doesn't look like diagonal because the lines are too parallel between the corrections, so I'm not sure I like that much. However, I'm just telling you that there is probability still, not high obviously, that another leg to the downside can ensue. Now on Aussie, I think we haven't looked at this for maybe a week or so, perhaps a bit longer. We are correcting. Is this no, it's a simple zigzag. So we've got 5-wave legs coming down with connected to the correction. 1, 2, 3, 4, and 5 looks like to me it's done, okay, because we've got a 5-wave move internally as well. And looks like now that move to the downside, the correction is similar to the euro dollar, right? So it looks like we're correcting, but here it looks like we're correcting in wave 4 rather than wave 2 as we are in euro dollar. So in euro dollar, we have done this already and we are going down now. Whereas in Aussie seems to be a bit back, a bit further lagging. So I'm looking at this as 1, 2, 3, 4 currently and 5. But in either case, in both sort of assets, I expect a sort of correction. You can see that the correction signs here for the Aussie dollar are a bit more clear, both on the RSI, and especially if we also take account into the last leg to the downside, we probably are about the 50 or 61.8. There you go. So it's very possible that we'll go down to 72.14 and then 61.8, and then most likely again down here, do a double bottom and continue higher up. We want the 76 to break, the 100 break, and then of course move to closer to the 55 cents. Okay, if we're going to turn lower down, then that means that this is 1, 2, 3, 4, and 5, which is a bit more of a clear structure here for potential downside, which is the probabilities for downside are a little bit bigger, especially if we take into account that we missed the 38.2 Fibonacci retracement of the full leg intermediate wave 1 to the upside. But don't forget, my 1s and 2s and 3s are always A, Bs, and Cs as well. Okay, oil moved above the median line. Okay, we said about watching that trend line yesterday, and not only that, what we're currently correcting, the correction is holding, okay, to around the $67, okay, which is the 50 Fibonacci retracement of the full leg to the upside, okay, in wave 1. that is. Or is that, hold on. Yeah, wave one. So, I mean, so 72, 78.6 missed, obviously, but we have 5 waves down. So higher probabilities to move higher than lower because we've also broken above the previous wave one, right? So the impulse continue lower down. It's a bit of a situation that we might not see. Unless if my wave Y suddenly turns into some sort of diagonal, but again, it doesn't look like too much diagonalish, does it? Then I see more upside coming in. What we need to do is, of course, in case we move lower, find a low over here, correct up to 69, and then break this descending channel, and then break this ascending channel back within to continue higher. Otherwise, any of these levels actually can pose a threat to more downside, okay? We are correcting currently, and we don't need to stay above the 50 over here, but we could get down to 64, 66, which is a very nice cluster between the 50 Fibo to the upside and the 61 Fibo to the downside, okay? So 64, 66 is a very good level to correct. Currently, that looks like a 5, okay? That looks like a 5. So pay attention to the correction, but look also at this hidden bearish divergence. That is looking quite strong. So we might see that correction coming in fairly soon. Now, what else do I see here? Obviously, the potential of a triple zigzag. Okay, that means that that channel is not gonna let us get through. USDCAD. I think I was looking for this to be a different sort of correction, but regardless, we came very close to wave one. Okay, penetration, and that's a very good distance to let the market know that, okay, we're not going to let the bulls revisit that level. Let's keep this impulsive. So to me that looks like a triple zigzag now, although a bit of a weird structure here. We are moving down impulsively. Okay, so we want to break the 61.8, that's from the downside, right? 125, we want to see that break. We want to see then the rest of these levels break, obviously, to lead to a fresh low down to wave 5, down to C of 5, and that's X, which is okay because we've got internal structures that they are corrective. After this, and that's going to be around 116, who knows, 115, we are going to see a big reversal. That, of course, is massively influenced by the prices of oil. Don't forget that is why we're moving like this currently. So that would also mean, and sometimes we need to look at this together, if oil continues higher. Okay, if oil continues higher, most likely going to see that taking place as well. Otherwise, guys, probably my 5 finished here, and that's 1, 2, 3, 4, and 5. There's no, there is interaction here, which means a leading diagonal open one. I'm not sure I like it. What if ABC, 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 ABC? What if that was some triangle? That would be my wave 4. So 1 and 4 wouldn't interact. So that would be 1, 2, 3, 4, and 5. Okay, which means we're going to correct now down to 38.2, 61.8, who knows, and then continue higher up, which means there's going to be no new low. The invalidation of that, I'll be looking really at the wave 1 top here, guys. Okay, in case we move lower down, 124.87 is our level. Okay, I think though we're going to see that taking place first. Okay, a big correction up leg and then down C or 1, 2, and 3. Most likely 1, 2, 3, 4, and 5. Okay. And don't forget, this leg to the downside can be any motive wave. So either ending diagonal in 5 or an impulse. S&P. I've looked a little bit further back to make a slight change over here because I see a bit more extension to the upside with this structure coming in after comparing this correction and this correction. Because one would say that's 3, that's 4, and that's 5. Because they are interfering, and that's my ending diagonal. This is what I was actually doing last time, but looking at the duration and length of the first leg, more likely that's my first wave, my second, and I'm gonna get the third one up, where we can also set the diagonal lines for this and in diagonal, which in my opinion is what exactly we're currently seeing. I was more inclined, and I said this, to see further downside, okay, because we have a double divergence here to the downside, okay. But since the channel held firmly, we're seeing a bounce and we're breaking to fresh highs, and that is likely to continue being the case. I think we're gonna get our three over here, then we're gonna get our 4, and for 4 we need to break below the 43.99. Obviously, for this to be a diagonal, which means a false break outside the channel, that's gonna be obviously one of the several ones, and then do another ABC up. If we don't see that taking place, okay, then most probably that's gonna be my 1, that's gonna be my 2. And this is going to be some sort of multi-structural move to the upside, where 3 is going to go higher, 4 is going to go low, but not as low as this low. And then we're going to see a 5th wave up for an impulse. Okay, again, a motive wave here for the S&P, either impulse or ending diagonal. For now, ending diagonal is on the cards. Leading diagonal is on the cards, but further back down. Okay. This is it for the day, guys. I want to thank you for watching, and if you have any questions, do not hesitate to leave a comment, and I will get back to you as soon as I can. Take care, and we'll speak again tomorrow.